Hello, I'm Kim Donnelly from Premier Spending Planners. And today I just want to touch on how a spending plan actually looks into your future so that you're able to know the exact date where you might run into problems with your money and also the exact amount of trouble that you may be going to be getting into. So I'm just going to share my screen with you now. And here we have a spending plan in action. And as you can see on this screen, these people are actually spending about $1,341 a year more than the income that's coming in, which doesn't sound like a lot of money. However, when I show you inside their main primary bank account, here you can see that now the red indicates all the days where they're not going to have enough money to be able to pay all their bills. Plus, it tells them, if you see down here, lowest balance displayed, more than $4,000, and that they're going to be in the red and not have enough money to pay their bills by $4,067 on the 31st of March in 2020. So even though they're only $1,300 odd down for the year, they are going to be striking a bad patch in March and, as you can see, several other times during the year. So when you know how much of a hole you're in, then you can start to be planning how you're going to get yourself out. And that's what having a spending planner work with you does. It shows you how to get yourself out of this hole so that you no longer have any red days, and every day of the year you're going to have money in the account to be able to pay all your bills on time. So also, it doesn't just show you 1 year in advance, it shows you 2 years, and as you can see, this situation gets even worse over time. 5 years, well, and 10 years. So we want to be able to fix this before it gets out of hand, like it possibly could with these people. So how we do that is we go into the transactions, which is all the expenses that these people have told me that they've got. And in this particular case, what was happening was that these people had, in March next year, they were going to have rates, insurance on their house and insurance on their car, all falling due within a month period. And that's what made that big hole of over $4,000. So what I did was I quickly contacted an insurance broker that I know and trust, and I got him to do a quote for these people. And instead of costing $2,960 in, 31st of March, my insurance broker was able to get monthly payments for these people, and they also saved over $800 a year on their insurance. So that's a huge saving. So I'm going to show you how, by fixing that in the spending plan, how much of an improvement that will make to these people's circumstances. So I'm changing that payment from March next year to current time and changing it to $180. Sorry, I did that wrong. Got to go in and change that from annually to monthly. It's good for you to see that actually. The car insurance as well, they're paying $564 a year. The monthly payments came down to $47 a month, and again we started them now. Now the best thing about this was that by going monthly, we cancelled the existing insurance policy after we had this one in place, of course, and because this policy had been renewed in March, and I was talking with these people in July, they actually got a refund of $2,016 a week later after we cancelled the policy. They went straight back into their bank account, and that gave them a good influx of funds that they needed, and made their payments monthly. And I'll show you, just doing that one thing, how knowing where to save money and how to save money by being a spending planner, showing people just what a big difference. So you can see initially here, instead of being $1,341 in the red, already they're now $1,475 up. So their income is now more. So we'll go into their plan and see if that improved the situation and how. Look at that. So as you can see, just doing that one thing, and I do many things, I work with people and show them a lot of ways that they can save money on all their expenses. But for this particular sort of clients, just that one thing has meant that the worst day of the year for them, instead of being over $4,000 on the 31st of March, is only going to be $323.20 in April next year. However, I'm not going to stop there. I'm going to go and show them several other ways, easy ways, that they can make some adjustments with their spending that will mean that they actually have a lot more money surplus to that. So for example, I'll go in here. They told me that they would probably spend about $175 every 3 months on clothing. So I've suggested to them, how about we just try and spend just a little bit less than that? Let's spend $155 every 3 months. Let's do the same with your food. So they tell me they probably spend about $260 a week on food. I'm going to change that to $230. If they're conscious of what they're spending, I'm sure they'll be able to save that $30 a week. Okay. Let me see, fun and entertainment. So they were spending about $80 a week on going out and having fun on whatever, sport or going out at night or going out for dinner or whatever. I said, how about we try and reduce that just by a little bit down to $65 a week. We've done their insurances. So now we'll go to takeaways. So their fun money didn't include takeaways. So I've said, let's pull that back to $45 a week. I'm sure you can still get a decent meal for $45 a week for 2 people instead of $60. Okay, now what that means is that originally we had them spending $465 a week on their weekly money, on their fuel, food, fun and incidentals. So if I go in here, this plan for that account will show me that they don't have to spend $465 anymore. They've just saved $60 every week potentially. So I'm going to go into the transaction for transferring that money out of their bills account into a separate account for their weekly living to keep it separate. And I'm going to change that to $405 a week. So let's have a look at what that does for their plan now. Look at that, instead of being $1,341 in the red, they now have a surplus of $4,720. So that's $6,000 I've saved these people just by making a few minor little changes to their spending. And let's have a look in their bank account and see what that says. Look at that. Okay, I still have a minor surplus of $17.15 on the 25th of August, which is when they started this plan, but that's very, very minor, and that's a very easy thing to fix. And look at all the green here now. That's showing that potentially next year they're going to be saving $4,000 and $5,000. We'll look at 2 years. There, no red, beautiful. 5 years and even up to 10 years. Oh, look at that. Okay, so potentially they can be saving far, far more. Now, with this couple, they actually had an account. They actually had a car loan. And if I go into that car loan account and I look at 5 years, this is telling me that their car loan that they are paying $567 every month on is going to take them until, over here, January or February 2024 to pay off. So keep that date in mind. February 2024. With the savings, I've ensured that those people are able to make. They've got a lot of things they want to do with their savings, but one thing they want to do is reduce that car loan period of time and the amount of interest that they're paying. So I'm just going to show you, if we put, for example, $40 a week extra funds into that car loan out of the primary bank account, transferring it to the car loan, and we save that, let's see how much time they save. Okay, go to 5 years. What was our date before? February 2024. Look at that. They're going to have that loan paid off in November 2022. So they've saved 16 months off the term of their loan, and also that would equate to a fair amount of savings on their loan as well in interest. So what a bonus for them. I'll go now back to their dashboard, to their bank account, to confirm they could afford that. Yes, apart from that $17 in arrears. You go, oh, all right, so that does mean that in 2022 October they are going to have a slight period where they're not going to have enough money. So we will then adjust the figures back to make that work for them. See how easy that is when you've got a spending plan in place to show you how you can forecast into the future where you may potentially strike problems. And as a spending planner, I show people the best ways and a lot of strategies to make sure that they're able to afford all their expenses and pay down debt fast. So if you'd like to learn more, please feel free to give me a call at any time. I'll be happy to have a chat about your individual circumstances. Thank you.